Welcome to Lesson 8.1, the Earned Income Tax Credit. First, let's talk about what a tax credit is. Credits are designed to offset tax liability. There are refundable and non-refundable credits. Refundable tax credits are preferred in a lot of cases because even if there is no tax liability, the taxpayer can get the entire amount of the credit, whereas non-refundable credits can only offset the amount of taxes owed, and anything past that the taxpayer will not receive. The Earned Income Tax Credit, or EITC, is a refundable tax credit. It's the largest, most effective poverty relief program in the country. It's designed to push people above the poverty line, so it's very important to a lot of our clients, and that's why we have our name, the Cuyahoga Earned Income Tax Credit Coalition. There are two sets of rules for the Earned Income Credit. One set of rules is for taxpayers with kids, and another is for taxpayers without kids. So don't mix them up. Both sets of rules don't apply to everyone. If you already watched the video about dependents, you know there are rules for claiming qualifying children. The rules are the same for the taxpayers claiming the Earned Income Credit. So we're going to need to pass the relationship test, the age test, and the residency test. The only difference is that there is no support test. So if you have a child who is being supported by the other parent but living with you full-time and meets the age test, which is under 19 or under 24 if a full-time student, and then they also meet the relationship test, then we can still claim them for the Earned Income Credit, even though we couldn't claim them as a qualifying child for the extra exemption. So keep that in mind. We won't see it often, but it is something that we need to be aware of. Moving on to the next set of rules, these are taxpayers that may qualify for the Earned Income Credit, but there are no children on their tax forms. These taxpayers must fall within a certain age range, and that's 25 to 64. They cannot be claimed on another person's return, so they can't be a dependent of someone else, and they must have lived in the United States for more than 6 months out of the tax year. A couple other rules to be aware of, please make a note of. A taxpayer who's married filing separately will not qualify for this credit. And then for this specific credit, taxpayers who have ITINs are not eligible. Everyone must have a Social Security number that's claiming the Earned Income Tax Credit. Looking at the income limits here, this is all earned income. Keep that in mind. You might have a client come in whose income is very low and you want to make sure they're getting this Earned Income Credit, but if that income is Social Security or disability or unemployment, they're not going to qualify. It has to be earned income. The maximum credit amount is over $6,000 this year, so this is a very large amount to our clients. This can account for a fourth of their yearly income in one lump sum during the tax season, and that also makes them prey to predatory tax services. Some of our clients who've gone to paid preparers to claim the Earned Income Tax Credit in the past have paid over $400 just to have one form added to their tax return, and that's why what we're doing at our tax site is so important. In our new software, TaxSlayer is going to start the process of claiming the EIC for you. There are no more buttons to click to check if an individual is eligible for the EIC anymore. This slide is showing where the information about the Earned Income Credit is located. And mostly, this is where you'd go to file a Form 8862, the information to claim the Earned Income Credit after a disallowance. Once you're finished with the return, the software will have you answer questions on a screen that looks like this. And here, you're going to be answering questions about the taxpayer and the children, if there are any on the return. We do need to go through each of these questions with the taxpayer. So this first question, was the taxpayer a non-resident alien for any part of the year? This is checking to make sure the taxpayer doesn't have an ITIN. Next, was the taxpayer a spouse, a qualifying child of another person? Again, if this is answered yes, then the taxpayer cannot claim this credit. And this is one question that you do need to be careful with. Always ask them this. There are a lot of young adults, for instance, who come to our sites to file their taxes and they are being claimed by their parents. So please read these questions carefully. This next question here about Form 8867 is all about you as a volunteer doing your due diligence in preparing this return. Have you asked the taxpayer all the questions you're required to? Specifically those questions on the intake and interview form next to where they listed their children regarding months in home, if they provided the full support, etc. And have you checked all Social Security cards and photo IDs? Same with these next two questions. Did you do your due diligence to make sure this taxpayer is eligible for the tax credit? And then this next question, asking if the child is being claimed by anyone else on their return. And then those documents used to determine residency, it says that. So they're asking if the taxpayer kept records, any of these records found below. This will probably be a no, since most of our taxpayers wouldn't be aware to save documents like this. The only exception is if the taxpayer is already claiming the dependent care credit, then they will have proof of residency for their child, and you can check the box below. You do need to check at least one box. Most likely it will be the did not rely on any documents. After you've answered those questions, this screen will pop up. This shows if the taxpayer is eligible for the credit. If the taxpayer is eligible for the Earned Income Credit, TaxSlayer will calculate the amount and transfer it to the 1040 line 66. Thank you for watching this training video. If you have any questions, feel free to contact volunteer@refundohio.org.